The herd spent this week seasick Warband. Green on Tuesday, red by Thursday, green again by Friday's close. The tape lurched, and most men lurched with it. We did not. This is Saturday, July 18th, 2026. Let me tell you what turned while the crowd was still holding its stomach. Start with the anchor. As of just past 5 Eastern, Bitcoin trades just under 64,000, up nearly 2% on the day, climbing back off the floor of the low 60s. But the price is not the headline. The signature under it is. At 4 o'clock Friday afternoon, Eastern, our read of the InvestAnswers Decision Support System flipped Bitcoin's optimized trend back to bullish. Green. Yesterday morning, I stood on this exact ground and handed you the red. The whole crypto cluster market bearish, and I told you the red had held, no sugar in it. Friday at 4, it turned, and I give you that turn as straight as I gave you the red. Now, mark what kind of turn it is, because this is not a lone coin twitching. Our engine tags Bitcoin the leader of the entire tape this morning, the one asset out front, while the Nasdaq's own trend sits red beneath it. The long bond turned up green alongside the coin. The crowded silicon names that led this market for a month, Arista, the power grid names, even Google, rolled their trends to red across Thursday and Friday, and through a week that should have belonged to gold. 6 straight days of American airstrikes on Iran, a barrel climbing. Gold could not muster a green trend of its own. Read that clearly. The engine is not calling a rising market. It is calling a decouple. Capital, leaving the crowded and the soft, and moving to the one scarce thing at the front of the column. Here is the tell the crowd is missing. The fear gauge still reads 26. Fear, plain and deep. Bitcoin just held the low 60s through 6 days of war without cracking, a resilience the desks are calling new for this cycle. And beneath the fear, the money quietly changed direction. The spot Bitcoin funds booked 3 straight days of net inflows into Friday, BlackRock's fund leading them, snapping a drought that ran better than 8 weeks and $8 billion. Be honest about it. The longer tape is still red, so call this a fragile turn, not a stampede. But the shape does not lie. The signal flipped green, the flows began to follow, and the crowd is still reading fear off of yesterday's screen. InvestAnswers marks the 60,000 shelf the place to reload, and notes the futures now trade at a premium to spot, leverage and appetite creeping back in the dark. I live, I burn, I love, I slay, and I'm content. That is the posture that holds a scarce asset through a whipsaw week and a fear reading, and lets the weak hand sell you the bottom. Now from the money to the machines. This week, a Bank of America note sizing up Tesla ahead of Wednesday's earnings put a hard number on the thing that actually matters. Tesla's robotaxi now runs in 5 markets since the Miami launch, and its Texas fleet added more than 100 cars in a single month to reach 175 vehicles, the fastest robotaxi fleet growth rate of any operator the bank tracks. Sit with the trajectory. A handful of cars in Texas in the spring, dozens by June, 175 now, live across 5 cities. That is no longer a pilot, that is a fleet compounding on itself. And here is why it cuts against the crowd. They keep scoring this company on cars sold. Deliveries beat every estimate last quarter, and the stock got sold anyway. The car count was never the prize. The prize is the fleet that drives itself and the miles it books with no human in the seat. And that fleet just doubled in a month, not a year. When a robotaxi count runs from dozens to 175, while the staging lots keep filling, you do not wave it off as quarters away. The build-out is the leading indicator, and it is accelerating. Into Wednesday's sprint, autonomy at scale is the whole game, not the quarterly tally of steel they keep counting. One deeper current, and it ran this very morning. Jordi Visser of 22. V. Research set for an interview today and laid down a read worth carrying with you. He has turned more bearish on the job market, and he calls that bullish for Bitcoin. Follow the logic because it is sharp. The weakness now creeping in from artificial intelligence agents, software that does the work a salaried man used to do, is a pressure the Federal Reserve cannot answer with interest rates. You cannot cut your way out of a machine that replaces the worker. So watch what falls out of that. The displacement is deflationary. It caps how hawkish the Fed can stay, which is why Visser lays only 35 to 40% odds on a hike at this month's meeting and says a hold could carry Bitcoin back above 70,000. And the workers that machine displaces go hunting for a store of value no employer, no committee, and no algorithm can dilute. This is the scarcity thesis turned inside out. The same artificial intelligence sold to us as endless abundance is quietly making human labor abundant and cheap, and driving the survivors toward the one asset with a fixed and final cap, 21 million. The machine can copy everything but the coin. So carry this into the weekend, Warband. The signal turned green while the crowd read fear. The flows began creeping back while the desks called for lower. Tesla's self-driving fleet doubled in a month while they counted cars, and the sharpest macro mind we follow says the machines eating jobs only deepen the bid for hard money. Respect the whipsaw. Do not chase the first green candle after a week of chop. Keep your eye on the 60,000 shelf and the Fed on the 29th. But the direction is set, and the crowd is late to it. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Until the next dawn, sharpen the axes. Skål!